Hello everyone, hope we're all doing well. So today let's try to remind ourselves about something that we have covered before in detail. But because this is something we do or we use every day. As long as you're a trader, use these things. So we need to keep reminding ourselves as we journal and we correct our mistakes here and there, right? So in this video, we are going to be reminding ourselves about break and retest. Some of you call it a strategy, but I believe this is something that's supposed to be part of your trading, no matter the type of trader you are. Scalper, swinger, position trader, etc. Or this, no matter the strategy you're using, it doesn't matter. Structure trader, indicator trader, and the rest, right? You're going to encounter it, right? Let's just try to remind ourselves. I won't do it just, it's not like the previous video. The previous video we're doing a replay thing, but I want us to analyze one of the setups that we've been looking at over and over. We've been talking about GBPJPY. I think we shall do two examples. I traded GBPJPY. I think I'm going to continue up with it up to this target. I'm focusing on USDJPY. So we're going to look at GBPJPY and USDJPY so that you can see exactly how I'm analyzing this. This is the same setup we're going to look at here. Is the same setup I'm looking at here, which I'm going to be trading. So we have talked about GBPJPY a couple of times when it was down here. It broke above. We expected a pullback. It did that. Then I spoke about it when it was up here. We say that we expect it to make a pullback up to this exact level here. Then we can continue up. So there was a very good opportunity for us here. Then we pushed, but I exited it. So I'm not going to continue up with it here for a few reasons. I'm going to list them as we're doing the breakdown. So we're going to use break and retest because I've been advising you guys that in case you're not yet comfortable with the rules that we give here or you're trading as a person, I do recommend you trade continuation. So you can see these have been continuation trades from here to here, from here to here. These are continuations. Anyone who is wondering what a continuation is, for example, if the market is moving upwards, so it breaks here, we're going to be talking about a break today. I think you've been hearing me talking a lot about break retest. So I want us to emphasize on it. So, excuse me. So when the market breaks here and the act of it coming back to retest, we're talking about break and retest today. So if it has broken this turning point, this aggressive break, push up, sorry, this is a break. Then this pull back here, or this act of the price coming back to this point is called a retest, right? So now a continuation trading is when the market comes back to this point here, and then you trade this movement, this leg that is going to be aggressive or impulsive. It may not be necessarily aggressive or impulsive, but this act of it going to make a new high because this is an uptrend. In an uptrend, we're making higher highs and higher lows. So this was a higher high, higher low, higher high, higher low. So in simple terms, a continuation trading in an uptrend, you're taking your trades at higher lows. And where does a higher low occur? A higher low can occur at the previous high, like here, or it can occur at the previous higher low. Are we together? Most of you don't understand that. The market can come and retest the previous higher high, or it can dip deeper into the higher low. If there's untested structure into this level, it can come up to here to test that structure before continuing, right? So those who don't understand what I mean, whenever I'm mentioning that, I advise you trade continuations. So that's what we mean trading with the trend. You're following the trend. Alternatively, the same as when you're trading in a downtrend, when the market is making lower lows and lower highs, the market can either come and retest this previous lower low. It can even come and retest the previous lower high before continuing if there's untested structure here. So I do recommend you trade continuations. Since we have said that in an uptrend, a continuation trade, you're taking it at a higher low in an uptrend. Now, meaning in a downtrend, you're going to be taking your continuation trade at a lower high or a previous, when the market is testing a previous lower low, right? So you'll be taking your trade when the market is testing here, making a new lower high, or you'll be taking it at the previous lower high here when the market is making an equal high so that you can continue with the trade. Continuation trades, very easy, right? You don't need to look out for where is the market going to stop. Even getting targets is very easy, but those who are experienced, it is okay. You can trade either sides, right? You can trade the continuation, the retracement, the continuation, the retracement, the continuation, as long as you can identify where the continuation stopped, where the retracement is going to start from. That's why I'm saying it requires experience, right? So let's just clear our chart and make it clean. Of course, these are my markings that I did personally. So let's just clear them so that we can have a clean chart. As usual, I'm going to emphasize this. I normally see some people coming in the comment section. I normally sometimes go through the comments and someone is saying that you can't wait for all those days and all that. I've always mentioned it in almost all videos. The time frames we're using are the time frames that we use, but I've showed you how you can pick your time frames using the same method, but you choose your own time frame that you're comfortable with. If you're used to seconds, it is okay. If you're used to 1 minute, it's okay. If you're used to 5 minutes, it's okay. But according to my experience, the years I've traded, uh, the level of consistency that you can attain with very tiny time frames is very minimal. It's very small, right? Unless you've traded for some time of for some number of years, then you want to zero down. For example, you were doing maybe day trading, and then maybe you want to start scalping. Usually people think that you should start with scalping, but I usually recommend you start with day trading or swing trading. Then you can zero down to scalping, because scalping, you're using the same rules. The only difference here is that you're lowering the time frame. Are we together? Let me just repeat. Scalping, you're using the same rules, but the only difference is that you're lowering the time frame, right? If you're using, let's say, H1 for your entries, 1 minute, 30 minute, 15, this time you may use minute 5 or minute 1. Are you together? Some people even go into seconds, which I don't recommend, but that's what scalping is all about. So in case you feel these time frames are so big for you, don't complain. Just listen. Some of you just want to skip the videos and then you don't listen to what I mentioned in the video. So starting from the monthly time frame, we clearly observe that the market has broken this high here. I think we have spoken about it in the previous videos, right? Then when we go down to the weekly time frame, we spoke about this high being broken, I think, in the 2 videos back, not in the immediate last one, but the 2 videos back. We spoke about it here, how we expect the market to continue upwards, which we broke, then it came back. Now, this is what I want to speak about here today. Some of us do not understand how a break looks like. You don't understand if the market crosses a certain level that I've marked. Where should I look out for the retest from? For example, if I've marked, let me just give you an example. Let me just clear this. If this is weekly, and this is the turning point that I'm interested in, this one here, I've marked this level here. If I mark this level in the weekly time frame, and I'm interested that the market, yes, has crossed this level, this is a full body candle. Now, what are the rules? I'm just going to remind you about the rules. In case you want to watch it in detail, I'm just going to attach the video in the top right corner. You watch it in detail. But the rules of break and retest are, first and foremost, there has to be a break, right? But this break has to be what? This break has to be an aggressive break. If it's not aggressive or impulsive, the break has to make sure that the price closes using full body candles, right? Now, for example, this is a full body. By full body candle, I mean that, excuse me, the wicks are almost of the same length and the candlestick body is big, right? So if it appears that the market is crossing with a doji, I usually don't recommend that. It shows that the market is losing momentum. And also, if the market crosses the level you've marked and is losing momentum, I've spoken about momentum. For example, big candle, it approaches this here with a big candle, then the candles keep reducing. Even if it crosses, usually I don't advise you to go for such breakouts, right? I hope it is clear. So that's one way to know that you're going to be faked. So a break should have a full body close or an impulsive closure, right? For example, this is an impulsive push. Then when an impulsive push happens, we want to see a loss of momentum. I've spoken about loss of momentum in a previous video. You can just search in amongst the videos. So the retest has to be weak, or what we call, it has to have a low momentum. Now, what do we mean by low momentum? It means that if there's an aggressive break, that means that the market should come back down with a low speed. Now, by low speed, I mean that if, let's say, there was one aggressive full body candle breaking, we need to see several candles, or we need to see a mini trend being formed here if I go into a lower time frame, or in that same particular time frame. Now, going back to what I just mentioned, if you've marked this level here, that the market should cross this in weekly, I expect to see also the retest in the weekly time frame. Are you getting it? Now, someone may be saying, should I also take the trade in the weekly time frame? No. We're just interested in the price coming to touch. The moment it touches here, then you switch to your entry time frame. For example, this is weekly. I use weekly to identify my structures. So when the market touches here, I'm automatically going to switch. I can sometimes check daily to see how is the market behaving. How did it approach? Did it approach in a good way? Was it weak? I identify, yes, this was a weak push down here. Then I'm like, okay, then I can go to my entry time frame, right? Which is H4. I like using the H4 time frame. Now, I've taught you guys about two to three entry methods. Then you can clearly come and see that the market touched this level. showed you that this level is significant, then took out people. I told you guys about how you should wait for the market first, take out. When it comes back, then it should retest this area that the market broke, which the market exactly did, and then you take your buy. But this is old history. I don't want us to look at. I just want to explain what a break and what a retest is. I hope now I've answered that question. Let me just repeat. A break should have the following. A break should either be a good candle, a full body close. Whenever you see that it's approaching a loss of momentum, that level that you've marked, I recommend you avoid it, right? That's one. Then secondly, if it's not breaking by one good momentum candle, it should be an impulse move, or what we call an aggressive move, right? Then when a break happens, we have said that there has to be what we call a retest. Unless otherwise, there are some circumstances whereby the movement of the break is so aggressive that it requires us to bring in what? A Fibonacci retracement tool. But that is another video that we talked about. You can just watch it, right? So if it's not very aggressive, it means that we need the market to come back and retest the level that it crossed, that level that you marked, right? This is the level that we have marked in our weekly time frame, this one here. Are we together? Let's just go back. This is the area that we have marked, right? So if the market has crossed like this, we expect it to come back, but this time it should come back with what? That coming back we're calling it a retest. So it should come back. How should it come back? Well, it should come back with which momentum? It should come back with a low momentum. That's what we call a break and retest. So to summarize, the break should be in the same, if you've marked it. So let's say we've marked in weekly, that same time frame is where we expect the retest to happen, right? So if the retest happens with the conditions that I've given you, low momentum and the rest, or with some kind of trend that you can observe in the next lower time frame. Lastly, if taps that area, because sometimes when the market comes back, it may tap it, then it rejects. It may not show you that actually it came back, but it may show you that the same candle. It may come and touch, then it rejects, right? So there the market has retested. So for it to be a weak momentum or not a weak momentum, how do you identify that? Like I've just mentioned, you go to the next lower time frame so that you can see if there's a trend and how is the momentum compared to how the market broke, right? So after marking that level, check in your change of trend time frame or your entry time frame. So just a reminder again, weekly your entry time frame is H4. If you're using daily, your entry time frame is H1. If you're using H4, what's your entry time frame? Your entry time frame is going to be minute 30. If you use like that, you continue, the list goes on and on. We have spoken about it in the video of time frames. So let me just clear this. So I hope everyone has understood. So let's continue with our breakdown. So we marked that. Then also, if you're to observe here, the market has broken above this area here, whereby I'm expecting that the market should give us a retest, right? Let me just extend it a little bit like that. So I'm just going to delete this so that we can have a clean chart. Now, when I go down to the daily time frame, what do I observe? Now, recall weekly is speaking that we had a turning point here that we have marked, right? And there's a break here. But how is this break? Is it a good break or not a very good break, right? We said that we need to see a good momentum pushing. If it's not a good momentum, we need to see a candle that is breaking should be a full body candle, meaning that the wick should almost be, may not perfectly be of the same size, but at least should be almost of the same size, but the body should be big. Together? So if you're to observe this break, is it a good break or it's not a good break? If you cannot observe it properly here and you make a decision, it means that the next thing you have to do is to go to the next lower time frame to observe if it shows you that there's a weak momentum or there's a strong momentum coming back. Now, when you come back down to the daily time frame, the daily time frame is agreeing that yes, this is a resistance. You can see the market was rejected here. It came back again, it was rejected. Then we broke with a very good candle, right? And then again, the good candle upwards, meaning that now the next thing we wanted was a weak momentum, which the market gave us here. But in the process of giving us this, it gave us also a W and came back and retested this area. So now, if you're to observe in weekly, remember we said that we want the market also to come back in that very time frame. Let's go back to weekly. Now, weekly is saying that, yes, the market came back, but it's not so appetizing. Now, when we go down the daily time frame, it shows that also the market in the process created for us a neckline here. So even if the market does not come back exactly to this green area here, at least it should come back to this neckline here. Are we together? I don't know if I'm confusing you, but it's the same things that we have been doing. Just trying to explain it deeper. So in case the market does not reach deeper into this area here, because we have said that the retest, the break should happen at that same time frame you've marked your level, and also the retest should happen at level. So we have marked our level in weekly, which was this one here. So weekly is saying that this level here is not tested because the market didn't come back. And also daily is agreeing that this is a resistance because the market was pushed down from here. Again, market was pushed down from here. We broke it, came back, retested, attempted to break up, sorry, to continue upwards. It failed. Then we had a very weak momentum of sellers. Then we broke back above, right? When we broke back above, we retested this area here in daily. But weekly is saying, well, we didn't retest this level here. So we need to come back and test. Though, Dale also is agreeing by saying that, yes, I have a neckline in this area, just above, slightly above this level here. That's why I've marked this neckline here. You remember the rules of a W. When the market creates a W, it has to come back and test it. And you can see this retest here was a false one. So we had to come back. That's why you see the price is reacting here. So depending on how you would like your to take your trade. So personally, I'm just going to adjust this so that the slabs are not so big. I'm just going to adjust it like this, right? Then I have also this neckline marked. If you don't want your chart to be a little bit messed up like this, you can just use a line like this, right? So that your chart is a bit neat. So I'm just going to mark the high of this and also the low of this neckline here. So you can see the price is already coming this. Now here I am done. So what's the highest point that the price reached? The highest point that the price reached is this one here. Are we together? So I've already marked out my levels, my structures in weekly and daily. So if I'm going to use the weekly structure, I'm going to wait for the price to come back into this area here, either this red line or this green level here, right? Then if I'm using the daily level, I'm going to be interested in this level here, this neckline area here, because according to daily, this area was already tapped in. So I'm going to be interested in this area. So we've already had our neckline be tested here. So we shall be waiting for just a change of trend and we push up. But if you're to observe, both of them are agreeing that this is the area that is very key, this area here. So what is next? The last one that we talked about, which is change of trend. So let me just clear this. So now go to the H4 time frame. Let's observe. Is there a change of trend happening? What is a change of trend? A change of trend is when the market was moving downwards and then it starts moving upwards. So for example, what do we observe? We observe equal highs here and then we observe a lower high. So this is a lower high, right? Why is it a lower high? Because the market has failed to take out these highs here, these equal highs, and has created a new low. And this low here, sorry, this a new lower high here. It's aligning perfectly with this standing point here, meaning that the market is most likely going to be pushed back into this area here. So if you can make this low here, or a new low, or even into this green level, it will be perfect. So we want to see the market doing this to tap into this area. Now, the moment it starts failing to create new lows, this is what we call a change of trend. So when it starts failing to create new lows by creating structures like we have spoken about, like W's, reverse head and shoulders in this area of interest, that's when you can take your trade. Now, I like using H4, but some of you could like maybe using H1. It's up to you. You could use H1. It's also okay. But you can see the more you go to the lower time frames, the more it becomes noisy, right? So personally, that's why I love using H4. People don't know why, but I'll do my entry markings in H4. That's when I can go and do the refinings, right? Now, I hope you guys have understood perfectly the break and retest concept because we've been getting a lot of questions on it. So those who trade GBPJPY, this is the setup I'm so much interested in. If the market can give me something like this, and maybe create double bottoms, then I'll be interested in the trade up to here. Though, like I said, I'm not going to continue with it because I already moved with it and I'm not happy with how it's behaving there. Let it first give a push back into this area. Now, another that I'm so much happy with is USDJPY. Also, we have spoken about it a couple of times. You can just check on the channel here, right? Now, I don't know how many times I've spoken about USDJPY, but we have been talking about it. And I told you guys why I expect it to continue moving higher and higher. Now, if you're to observe, let's just do analysis. Let me just clear everything. Let's just do it as the way we are seeing it. Now, if you see, the highest point that the market had ever reached was this one here, right? And price respected it. So we have this high, the market was pushed down, And when the market came back, the price came back, it was again pushed down, meaning that there's something here. Now we want to see how is the month going to close, but the month is still young. Does it mean that you're not going to trade? No. The month is not where we get our structures from. Month is just for direction. So if you can see, the monthly shows that the price is so aggressively pushing higher, right? And it shows that it's attempting now to cross up here. The month has not closed, but there's high probability that we're going to close because the sellers have attempted to push price down, but buyers finally rejected them, right? So let's check the structure time frame starting from the weekly. Now, if you check weekly, still the same thing, resistance pushed price down, resistance pushed price down, but not further like this one here. So what do we observe now? When we reached also here, the sellers attempted to push price, but they this time failed. So what do we observe here? We observe, why did I have a big box here? You guys recall that we had a W with a structure here. Now this is the structure I told you guys the price is going to come back and tap into. As I see the price came back here. Of course, we also had a lot of structures here, but we expected price to come back and tap into this area, which it did. So the market gave us that high, and this is the level that the market broke, the high that gave us that push down, and the price came back and tested it. So which is the high that gave us this push down here? It's this same high, which is aligning perfectly with what we have drawn in monthly. So I'm just going to delete this one to make our chart clean, right? Now, when you go down the daily time frame, does it agree? So when you come back the daily time frame, you can clearly see that we had a very serious consolidation here, and also it's consolidating just above a previous high level. Now you can see this is a very clean what? This is a high, higher low, high, higher low. Okay, this is a high. Let's just start from here. This is a high, higher low. So we're printing a new high. Now, I've just explained this. If the market has created a new high like this, do not trade these reversals unless you're experienced. You've been trading for some time. You understand your rules very well. But so far, what do we observe? We observe that this is a very good candle break. It's a full body break. That's rule number one. Rule number two, now want to see a retest. A retest of a weak momentum, or if you can't sit in that very time frame, you can go to the next lower time frame and identify a weak trend moving towards this point. Then you can look for your continuation. Unless we say that unless the market aggressively extends upwards to make it an impulsive move. When it becomes an impulsive move, that's when we apply Fibonacci retracement rules. Are we together? So in this case, we have already identified our levels. Guys, I'm also going to trade this very setup because I love trading CAD pairs and JPY pairs. So this is USDJPY, right? I already traded GBPJPY. I'm out of it, but this is something that I'm looking at because it looks a very good setup. We have been following it. If you can check, we have been speaking about it when it was coming down, when it was going up here, when it was going to start all this move. We have been speaking about it because I follow them very closely. They're part of the setups that I love trading, right? So you can just adjust this. So now here it comes down to the type of trader you are. If you're a weekly trader, weekly is here saying that we have broken these highs. Let me just actually adjust this. We have broken these highs here. So what do we expect? We're just waiting. If the week is going to close a full body candle, then we can expect a week retest. If it continues higher, then we can apply in the Fibonacci. Now, when you come to daily, what we have yesterday already closed as a full body candle. So breaking this point here, is it going to make it an impulsive move? Because remember, we are trading continuations, not these ones. Because you can clearly see those who want to take sales against the trend, you can see how the market just stopped and then it could have already hit their stop losses. That's why one of the reasons why I recommend that you trade continuations. It's easier for anyone who is beginning, even if you've been trading for some time, but you just want to make your trading simple. And that's what I really like. You should make your trading very simple. So let's check H4, the time frame that I like using. Now, even if you come to H4, it has really not changed any trend. Even if you want to, because personally, I'm very conversant with my rules. Even if I wanted to take a counter trade here, it really didn't change any trade. You can clearly see it pushed higher, right? Very clean break, full body candle breaks, but it has not changed the trend to come and retest here. So there's no reason for someone to start looking for a sell, which I still don't recommend. I recommend you trade continuations, right? That is one. Then secondly, when the market is coming down, make sure when it touches here, no matter the time frame you've used, if you're using daily, you go and be in daily. So when the price comes and touches here, that's when you switch to your entry time frame. No matter the time frame that you've chosen to use, then you switch and you identify change of trend. We have defined change of trend. It's the act when the market is coming down, making lows, and stops making lows, then starts making highs. That's when you take your trade, right? I've tried to really try to simplify it through making my analysis, because these are the pairs that I'm looking at. Though the other I've already traded it and I'm out of it, but this is the pair that I'm looking at, USDJPY. So it's all about patience. In case the time frames are big, you zero down. You can start from H4, you can start from H1, but like I said, it's very hard to obtain consistency in those very tiny time frames. So that is it. I wish you guys a profitable week and have a nice time.